Good morning, traders. This is Greg Kilpack with the Trader's Plan on the Options Trading Desk, giving you your late morning market update. Today is Friday, January 21st, 2022. We're going to look at what the market is doing today, as well as our options trades, and a couple stocks that are making moves today and are on our watch list. We're going to look at our trades in Rivian, Snap, Twitter, and 3M, as well as what's happening in Disney and Netflix. Okay, so this is the diamonds, symbol DIA, that represents how the market is trading, how the Dow Jones Industrial Average is trading today. You can see that we're down only 1 point, which is 0.3% down. That's really quite flat from where it's been. Not too concerned about that. You can see it's kind of at a support level right here. Where it bounced a few weeks ago, and it may bounce again. I'm going to watch for that and see. We're seeing tails above and below the candle today. It's where the prices have been. The downward momentum seems like it might be slowing down, so we're going to watch for the bounce. Really, it's kind of a slow Friday because I'm seeing about 50-50 green and red among the stocks that I'm looking at. So that's really what's going on, kind of a slow Friday. Okay. Nevertheless, we have started earnings season, and we're starting to see action in certain stocks. Let's look at our trade in Rivian. So Rivian is down slightly at the moment, just down 17 cents, which is not very much considering that 3 weeks ago it was over $100 a share. Now it's trading below 65. So we are making money on Rivian. We bought puts on that and a 75 put. We're making some money on this. Let's look at our next stock. Let's look at Snapchat. Recently got into a put spread on Snapchat, and we're making money on that as well. Down $1.30 today. Gap down and going down further, continuing the downtrend it's been in for months. You can see it's well below the 50-day moving average, this big line up here. And I expect to bounce at some point. But if you notice in previous weeks, the up bounce was only a few days here. It was a little bit longer here, 5-6 days there, 3 or 4 days here. So when it bounces, it's probably just going to be for a few days and then continue the downtrend. That's what I'm expecting. Let's look at Twitter. Twitter is currently trading down $1.50 at almost 4%. Fairly big move for a $35, $36 stock. And it is also well below the 50-day moving average. And it's continuing to trend down. So we're making money on our put on that as well. One we need to look at is 3M. So 3M is getting a bit of a bounce today. We got to watch 3M. We've got a bearish credit spread. We sold the 180 call on 3M and bought the 185 for protection. Now 3M is up just $1.44 today at the moment. You can see the bounce is happening. Had a big down day yesterday, and it bounces a little bit this morning. I'm not real convinced that this is a bounce that's going to continue up to 180. The thing you need to know about this is that earnings are being released on 3M, but this week. Next week. But the credit spread only lasts 1 week, but the earnings are going to be Wednesday or Thursday of next week. I forget which. I don't think that we need to be concerned about this because 3M is a great big stock. I'm not expecting any sort of big surprise that's going to make the stock go up. Weak stocks usually have surprises to the downside. Strong stocks usually have surprises, if there's going to be one, to the upside. So considering how weak this stock has been, it's been trending down and sideways for months. I'm really not too concerned about that. If you want to play it more carefully and conservatively, you should exit the trade before earnings are released. Okay, might not be a bad idea. Generally, that's a good idea to do that, but I tend to take risks a little bit more than your average trader might want to take. Okay, let's look at what's going on today in Disney. Disney gapped down today. It's currently trading down over $7 a share. You can see it gapped. There's a lot of space between yesterday's close and today. It traded all the way down below 137, has since climbed its way up to 140. The way you trade a gap is you want to see if it's going to trend down or up from here or go sideways. Usually there's an imbalance between buyers and sellers based on news and new information. So based on the fact that something drove the price down this far overnight, it's probably going to follow through to the downside. So I'm going to be looking for prices below 140 tomorrow that I can buy a put on, or maybe a put debit spread, a bearish credit spread, something like that. Probably I would be most interested in buying a put in a debit spread for this one, because I think it's could continue running down from here, but we'll see. You can see that Netflix had an even bigger gap down. It's down over $100 a share from yesterday. They announced that their expected new subscribers was going to be 6.5 million, and they only got 6.3 million. They only got 2.5 million, which is less than half what they were hoping. And obviously the stock took a hit on this. Same thing on the gap with Netflix as it was in Disney. It could trend up or down from here. I want to see what it starts to do tomorrow. Again, stocks tend to trend in the direction of the gap, at least for a while. Not always, though. And so, I mean, think about it. If you're a hedge fund manager and you own 1 million shares of Disney or something and you just took a big hit, you're going to probably want to unload and limit your risk on this of losing more money. So that's what's going on with Disney and Netflix. Good trades to watch, not tomorrow. Tomorrow's Saturday, but Monday, our next open trading day. Okay, so that's the late morning market update for today. If you want a free one-on-one consultation with me, I'd be happy to help you with your trades. Look at your trading style and what you're doing, answer your questions. You can go to thetradersplan.com/options-income to schedule that with me. Everybody have a great weekend, and I will see you again next week.